Hello everyone. This is the pre-market report video for 23rd January 2023 in terms of Nifty and Bank Nifty. First, let's see what happened on global market and then we can see some Indian market related info. And before going to the technical, there are some threads that I read in some websites which I would like to discuss. First, let's see what happened on Friday in US market. Both S&P 500 and Dow Jones opened flat, but the overwhelming positive Nasdaq opening made all three US major index to close really positive. There were two reasons for that. One, Netflix results. Then the second was existing house sales data. Even I mentioned in my Friday's pre-market video itself, on last Thursday night after the US market, Netflix released their quarterly results. In that, because of this new ad-based subscription addition, Netflix increased their subscription count to over 7 million new subscribers against expectation of 4.5 million new subscribers. This made the Netflix stock to increase around 8.5% and thus it influenced all other tech stocks. Both Google and Tesla increased around 5% and Amazon was up by 3.81%. I mean, all these tech stocks increased on the expectation of better quarterly results. Just for info, there will be a quarterly earnings release for Microsoft on coming Tuesday, then Tesla on Wednesday and Intel on Thursday. So, better to keep an eye out for these results as all of them got the potential to impact the market significantly. Then, coming to the second reason, for the 11th consecutive month on December on month-on-month basis, existing house sales number in US contracted over 1.5%. And because of those two reasons, all three US major index closed positive. Dow Jones increased by 1%, S&P 500 was up by 1.89% and Nasdaq rallied by 2.66%. Even US VIX dropped below 20. Regarding oil, earlier US oil production promised that they are going to increase their production over 1 million barrels per day to compensate Russian oil price cap and Saudi's production cut. But last Friday, EIA released the report that US oil production is unlikely to meet their target for 2023. And this report made the oil price to increase around 1.5%. On Saturday, Brent crude oil traded near 87.5 US dollars per barrel and WTI crude oil traded near 82 US dollars per barrel. Then, in case of Indian ADRs, both banks closed positive. And however, despite the positive US tech stocks, both the IT ADRs closed negative. Whereas on Saturday morning, SGX Nifty closed at 18,127, which means it's indicating 80 to 90 points gap up opening. So that's what happened in the global market. Now coming to Indian market. First, I like to highlight the quarterly earnings results of ICICI Bank, Kotak Bank and Reliance Industries, which we discussed in detail on the week ahead video. I'll provide the link in the description below. Please have a look if you guys haven't seen that means. Additionally, in that video, I highlighted the macros and earnings that we need to look out for this week. Anyway, in short, both ICICI Bank and Kotak Bank posted a very good results. It beats the analyst estimation. ICICI Bank's profit increased over 34%, whereas Kotak Bank's profit increased over 31%. Both the bank's assets quality improved and additionally, Kotak Bank's net interest margin increased over 5%. So I consider Kotak Bank is more bullish than ICICI Bank. Just a disclaimer, here I can be wrong, it's just my opinion on the results. Then coming to Reliance, again their revenue increased significantly. However, on year-on-year basis, the profit increased only by 0.6%. I personally think market already factored all those since last quarter Reliance results was terrible and market expecting that, whereas now it improved by over 13% compared to quarter-on-quarter basis. So it will be interesting to see that how market will react to these results now. Then the next positive news was that on Friday, RBI released the statement that India's forex reserves improved to 572 billion US dollars, which was a 5-month high value. So as a summary, US market closed positive. SGX Nifty is indicating a huge gap up of 90 to 100 points. Banks ADR and banks results indicating the positive trade today. However, IT ADR's negative close in US market was a worrying sign. But if you see the delivery percentage on Friday, Infosys, TCS and HCL all got over 75%. Honestly, it's difficult to say anything regarding IT stocks since at present comparatively it's available and cheap. However, the spending reduction in US tech companies was the huge red alert for the Indian IT companies. So clearly, there will be a short-term negativity in the IT stocks. Then regarding the threats, as I said in my week ahead video, this week Chinese market will be on holiday due to their Lunar New Year. And this is the first time the Lunar New Year celebration without the lockdown restriction. And now this is posing the risk that the possibility of another wave in China. Then the second threat that I like to highlight is that at present US government debt spending reached its ceiling of 31 trillion US dollars. So if government wants to borrow more money means then that bill has to pass through the Congress, which is now controlling by Republican. Thus it posting the risk of US government spending cut, which again it will lead to the different consequences. In terms of technical, Nifty formed a 3 inside down candle formation and Bank Nifty formed a doji candle. 3 inside down candle. The rule is that it consists of a first large up candle, then a smaller down candle contained within the prior candle, and then another down candle that closes below the close of second candle. So Nifty forms exactly the same formation is an indication of bearish reversal. But if we take the last 4 days, on Tuesday it forms a bullish reversal, then on Wednesday bearish reversal, then on Thursday again bullish reversal, and finally on Friday again bearish reversal candle formation. I personally think Nifty don't know where to move. It's comparatively high priced than the other premium market. However, at the same time, it's a quality stocks which deserves the premium valuation with the economy that got the potential and indication of doubling in the next 7 years. And it's same for Bank Nifty. It forms a doji candle, also an indication of indecisiveness. So both Nifty and Bank Nifty kind of moving in a range bound, and the expectation is to follow the same at least till the budget time. Coming to moving averages, for Nifty at present in the daily chart, it falls below the 5, 10, 20 and 50-day moving averages. So as a summary, it's a sell signal. However, technical indicator summary still indicating a buy signal. In case of Bank Nifty, on Thursday, both moving averages summary and technical indicator summary were indicating a sell signal. However, now both turns into buy signal. I mean, Bank Nifty is trading only below the 20 and 50-day moving averages. Then regarding open interest analysis, for Nifty based on change in open interest, both maximum new call option open interest and maximum new put option open interest were added at 18,100. Followed by the next maximum new call option open interest is present at 18,200. So 18,200 is the immediate resistance. In case of overall open interest, again there is a huge short straddle present at 18,000 and 18,100. So the next maximum put option open interest is present at 17,800. Thus 17,800 is the support to look out for. Then coming to Bank Nifty, in case of change in open interest like Nifty, significant new short straddle were added at 42,500 and there are very small number of call options unwound at below 42,500. Anyway, it's difficult to conclude anything here. So from overall open interest, the next maximum put option open interest is present at 42,000. And in case of call options, the next nearby maximum call option is present at 43,000. Thus, 42,000 is the immediate support to look out for and 43,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.